The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Good morning, folks. We're going to take a look here. We're having a 61% pullback here in the gold off of this last range that we've had. It's very important that we hold that 1170. Breaking below that, folks, is sayonara. That's goodbye in any language. So we got to watch it very, very closely. It's amazing how the U.S. dollar is actually tracking everything. I mean, just as soon as the dollar moves, everything starts to go. It's just, it's truly amazing to see how money works in these foreign exchange markets. So it'll be interesting for the rest of the day, as it always is. Now, we're going to start out the day like we always do with the German DAX. Again, you can see here that we've been in the same area for 14 days, a very, very tight trading range of 170 DAX points. Remember, the top of that range is an exact 78% retracement of the entire bull move in the DAX, and also the retracement down. That happens to be a 78% retracement back. So going above that would be very, very bullish. However, usually when you see a range like this, it is doing either one or two things. It's either doing accumulation or it's doing distribution. And I have to assume that is going to be distribution because of the fact that even with the bullish news that we've had here in the United States with the Trump bump, none of these foreign indices have been able to, to go much higher than they were 2 weeks ago, which is, very characteristic of some really strong resistance. But that's my interpretation. And again, that's what that's what we're looking at right here. So we'll see what is going to be the same. I understand Mr. Z is talking about the potential $10 trillion short squeeze in the dollar. That's beyond my pay grade because they don't check in with me on those things. All I can do is look at the charts. They certainly do look bullish to the dollar. We're up at this 101. 4 level, the key level there is 102. We've hit that long-term triple bottom again in the euro. Anything below 105 in the euro is going to be incredibly bearish, in my opinion, and will take us down to par, which is the long-term target that we've looked at here in the euro versus the U.S. dollar. And if you remember, the euro started back in the late 90s. It had a range of, I believe, 65 on the low side and 165 on the high side. We've been up and down several times during that time. 10 years ago, we were at about 160. I happened to be in Italy on our honeymoon, and boy, believe me, it was really expensive. But now you get to go for it's pretty cheap over there. In some of these places, you can get really good rates. So it's going to be interesting to see what happens here, with the euro that we have happening right now. Now, I wanted to since we're talking about foreign currency, I just want to walk you through one that I'm going to try to change the theme here a little bit. You get tired of hearing the same old stuff every day, I think. So I just want to walk you through this Japanese yen that we were looking at yesterday because it's a very indicative of how these patterns set up. We'll look at them on the long-term basis, which is this daily chart that you're seeing here. This is from our good friend Jim Bartolione, showing you how he manages his equal moves and how he looks at the fib retracements and things like that. But we also want to be able to take a look at it from a trader's perspective, and we want to look at it, as a situation where you go down to an hourly chart and even lower on some time frames. But if we take it now down to the hourly chart, you're going to see a situation that gets to the patterns that we like to see. You see over that 3-day period, you had a very nice 3 drive to a top pattern where you had a perfect ABCD completing up there at that 113.90 level. The market since broke down to the 112.53. That's well over $1,500. And you notice that it was expecting to have a little bit of a rally from that level. if we go to the next chart, you'll see that you did see the rally ensue. And let's just get it up here so we can see it. Everybody can take a look at it. And you'll see that the rally came in right around that 113.26, and then it collapsed down to the 111.40 level, down $2,500. Folks, that's in a 24-hour period. Well, it's actually over a weekend, so it's more than 24 hours. But that's a very substantial move. That equals the move that we had from the 23rd to the 24th. That proves the theory that we sometimes talk about here at TFNN is any market that can give you $2,500 can take $2,500 away from you. That's a paraphrase of a quote from Thomas Jefferson when he talked about governments. He said any government that is able to give you anything has that same ability to take it away. And we saw this happen 90 miles south of Miami 60 years ago with Fidel Castro. So we've got to remember that markets react, pretty much the same way. Now, the next one, we want to follow through with this. After that bottom was made, I just want to give you an idea of just showing you how some of these patterns line up so you get an idea of what it's like. Just 1 second here. Going to have just a slight problem. There we go. You'll see now that the yen has now come, or we're back up to the almost to the 78% retracement now, up at this 113.25 area, 113.30 area, which is the 78% retracement. Now that would make this a head and shoulders pattern if you were looking at it from that term. Yeah, they have great medical care. Yeah, they sure do. There's an old, I better not get into that. Okay. All right, we'll just, the joke is, how do you get, no, let's forget that. Let's talk about markets and not say anything that supposedly is funny and maybe isn't. So that's what we want to do that. We don't want to do that, do we? No. But we do have a market that is ripe. I mean, R-I-P-E, boys and girls. Let's pull it up here. We're going to take a look at it here, and we'll just watch this. Hold on 1 second here till I get it right. Shucks. Oh, where is it? Yep, this is it. Hold on here. Yeah, not humor. It's sometimes. Okay, let's forget this. Get on to the markets. All right, this is a wheat market, folks. Take a look at this wheat because it's we're taking out those lows now that we made back on the 14th. That was the low of the full moon. And look where we are today. We are at a new moon. And look where we are possibly. We have a potential for this market to sell off a little bit more. That would make it very, very easy to make it a very interesting pattern from the downside. Now we're seeing the exact opposite in some of the other markets that we're looking at. If we take a look here, let me put up the Japanese yen currently. You'll see where we are here because it's finishing that. I think it's finishing that level, but we're not sure. But I did want to bring a couple of markets to your attention that are very, very important here. Just give me 1 second here, and we'll put one of them up here. This will be one here in the March corn. And again, you remember we're just a day off of the full moon. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, this is going to be a quick little review here of what a bearish chart really looks like. And let me get it ready for you right here. This happens to be the chart of copper, the red metal. I want you to take a look at this, folks. This is a chart going back a year and a half. If you'll notice what happened today, actually it was yesterday late in the day, we went up and we took the highs out of end of October by 1/2 of a cent from 273.5 to 274. It immediately dropped 17 cents to the downside. Yeah, 17 cents. No. Sorry, 14 cents to the downside. This is a very bearish picture for several reasons. The fact that it hit that 78% retracement perfectly for the second time. It came in on a really strong cycle day that we've been watching, i.e. the new moon that we have today. It also has two of the most bearish candles that you can get in Japanese candlestick, and that is the shooting star candles. We had one on the big day where it dropped 25 cents. If you remember, went up 25 cents and down 25 cents on that one day, 50-cent move in copper. And then we went up and made another new high yesterday with another shooting star candle, and now we're selling off. Again, today we got down to the 259 level. Now, if we get above that 275 level, 274, 275 level per pound in the copper, then you're going to be looking at something pretty bullish. But this looks very similar to the 78% retracement we made from last year's high in gold when it hit 1384. And so just keep an eye on that copper, because don't trade it very often, but it looks like it has some potential here for some movement to the downside. That's the way that it seems to be going now. We have a situation now in the crude oil where we're coming down, and we've just taken out the lows of the last day or so, which in itself is a very bearish configuration. I just wanted to bring the shorter term crude oil chart, if I can just find it. Here it is. This is what we did yesterday in crude. We were talking about this when we were on the air. In fact, our friend from Singapore, William, called in and talked about the fact that we got up to this exact 61% retracement of the high of November 22nd, the day, the trading before, the holiday. We broke down well over 7%. Then we rallied back to a perfect 61% retracement to the exact tick, 47.66, and that was the high. And now we've gone down, and we're touching the lows that we made, way back on November 25th. Now, if this fails, you're looking at an A, B, C, D pattern that's going to take it down. So if you went from 49 to 45, that's $4, right? So if you're at 47 and you take $4 off of that, that tells you you're going to get down to 43. So that's, basically similar moves, whether that's going to happen or not. But the trend in this is certainly, to the downside. Again, this is all related to what's happening with the U.S. dollar, folks. If the euro happens to strengthen, then there's a chance that these markets, in some of these commodity markets, would be looking at some really serious things happening as far as what's going on. We have the same situation going on in the soybean complex that we have going on in some of the other markets like corn and a few other things. Wheat is different because it's a totally different commodity. But if we take a look at the oil market, especially if we look at, let's just talk about soybean oil for a minute. We'll get to the edible oils here. You'll notice here this is March. Soybean oil, again, you're seeing that you have this same shooting star pattern yesterday. We're already trading below those lows of yesterday, and this is one of those bearish, shooting star candles. And if you want to know about those candles, folks, pay attention to Steve Rhodes. He's made a specialty of that, and he can answer just about any question that you might have on candles. Candles should be really simple. Don't worry about these. Well, I should keep my mouth shut, but they have all these things now called Ichi-Muchi clouds and itchy-twitchy clouds or whatever they are, and that's just another way of looking at moving average and Bollinger Bands or Keltner Bands type thing. Charles Keltner was the man who first brought out the theory of these bands. In other words, you go one or two standard deviations of price beyond a certain band, and that tells you where support and resistance come in. And it's a very useful thing because if it gets beyond those bands, it's telling you that you're going to be accelerating, much to the, to the higher area or accelerating to the lower area because you're breaking out of those bands. So they do have some usefulness, but you have to learn how to use them. I try to keep things just a little more simple so that I'm able to, just see where I have a pattern and ratio coming together. And then I try to, figure out if this is going to be a spot where I think it's going to be a place where I can, risk X number of dollars. And I try to be right more than I'm wrong. Sometimes it works better than other times, but it does work. It just takes time, to see the patterns unfold and make sure that you're able to look at some things that I think are relatively important when you're looking at pattern recognition. Let's just take a quick look now at what we were yesterday. I haven't updated this chart yesterday because we were a bit lower. We did get it, and this is in the New York Stock Exchange Index. I just wanted to see that we are looking at the area of a possible double top up in here. Remember, this is a non-confirmation in the New York Stock Exchange Index, which is the real stock market. We also saw non-confirmation in the NASDAQ 100, which are the big stocks, the big 25 stocks that make up the NASDAQ. However, the large NASDAQ composite did make new highs. So that in itself is a bullish thing. The other thing that is slightly negative to this rally is the fact that our advanced decline line did not make new highs. I think it got within about 80% of the old high. But given the fact that the bullishness that we had just in the Russell was up 20% since November 7th. I mean, that's just an outlier event. It was up 15 days in a row, and yesterday, was the first down day in it. So this is another one that, makes it very, very interesting. The key figure to watch from a technical perspective, folks, from my point of view, is the 2184 level. in the E-mini S&P. That's the one you want to be looking at. Now, we're coming into December. We're going to be switching contracts now. We're very soon, in another week, we'll be switching from December to March in the E-mini futures contracts for the indices. The bonds will be switching from Dec to March. Gold will be going to, well, we're trading February gold right now. And after February, April is a good traded month, but after April, you move to August gold. So there's a span there of about 3 months where you go from April to August, and then August you go to December. The September gold is a maverick month, and so is November. They don't even trade those things. March silver would be the one you want to be watching, but we'll cover some of these to see what's going on. I'm sorry, Terry, for making me laugh, but someone in our den, the Tiger Den, just said from one OPEC member to another, can't we just all get along? Terry, that's been going on for 3,000 years, my friend. So just keep in mind that they have different values over there. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to take a look here. Well, as I would probably guess, we are having the old limit minder going crazy. So give me 1 second here while I turn it off. Oh, that's the wheat coming down. That's what we want to see happen. Give me 1 second here so I can Okay, just take 1 second to turn it off. It's still quite a bit of ways from what we're looking at. Okay, boy, they're ringing everywhere. Just give me 1 second, boys and girls. I want to get talking about Deutsche Bank here in just a second, but first of all, we're just seeing all of these prices coming down, which is what we want to be looking at. Okay, the Deutsche Bank. We've been watching this from the bearish point of view. You'll notice that it made the big ABCD pattern down there at $11.08. That was the 1.618 expansion. We mentioned there that if it breaks below that, it's going to look just like Lehman Brothers. As you can see over the past several weeks, ever since the Brexit started it, but it's made a nice ABCD correction up in that 15 and change level, and now it started to go down again. That was a beautiful ABCD pattern, and as Gartley said in his book, it's best to sell ABCD patterns in the direction of the trend. The trend in this one is specifically to the downside, so that does look like a bearish chart. However, if we do turn around and get above these levels of 16, then that would be a situation that maybe the problems that Deutsche Bank has are behind them. But frankly, no one knows that. That's part of the factor of trying to be a technician or a fundamentalist. The technician really doesn't know. He just follows, what the chart is doing to you, as opposed to the rest of them. Now, one of the things that we want to pay attention to also today is the fact that I posted a chart. I believe I posted the chart of soybeans into the room. I thought I did. Let's just double check to make sure I did. Oh dear, maybe I didn't. I should thought for sure I did. There it is. Hold on 1 second, and I'll put it in the den here. We just completed a Gartley pattern here in the March soybeans, and we've switched over. Well, actually, there's January soybeans trades pretty good, but I've always moved to March. It makes it easier to keep the charts up to date. There's very little difference between January and March. As we get into May and July, then things will change quite a bit. But as you're into March soybeans, that's okay. These charts are identical, whether it's January or March. You'll notice that we completed the Gartley pattern up here. We've already broken 20 cents overnight. We're trading down into the 1040 level in the March bean. So this is telling you that this Gartley pattern so far is working nicely. Very similar to what we looked at when we were watching the soybean oil chart. For the March soybean oil, we had that shooting star candle at just 10 cents off of the exact 1.618. That difference is only $60, so that's a pretty much spot-on move. And so we're in the midst of this Gartley, making its first objective, which would be down around the 1010 level in the beans. That would be down 70 cents off of the high if it's able to make that level. But we'll watch it very, very closely. Again, most of these things are being related to what's happening with the euro. So far, the euro is held. That 105.20, 105.30 level, it really needs to hold that level, because if it doesn't, then you're looking at something that is rather difficult to understand. Now, there's another market that looks very interesting, and it has looked interesting to us for the last few days, and that is the market in the U.S. Treasury bonds. I wanted to bring this to your attention to show you what's happened here. I haven't been able to update this yet this morning because it's just been jumping around too bit in some of these other markets. I've been a little bit busy. And Terry, my alert went off in wheat. Whenever wheat makes new lows for the year, I put that in there to let me know that that's what's happening. And two things that occur. We're right over this new moon, which, nothing is more accurate than in trading lunar things than wheat. That is the best. It's just really it's really something to take a look at. But we're over this new moon, and I'm trying to select a price where I don't have to risk very much, and that's why the alert goes off. And I have alerts set, and they're set for the open, so that when the markets open, which we know is amateur hour, it tells me whether markets make new highs or new lows at that time. and that's what I'm looking at. But let's take a quick look here at the wheat, because we have a beautiful 3 drive to a bottom that formed over 10 days. We had a really nice retracement. We rallied up, and what we've done since that rally is the 382 comes in at this 153 level, and we've hit that, and it's held relatively well so far. In fact, much better than we've had in some of the other markets that are related to the U.S. dollar index, i.e. the euro and gold and silver. Now, silver made a perfect 61% retracement off of the move that we made. It just like gold did. Gold went down to the the 1279 level. We got to 1277.90. And we'll see if that's going to be an important level to hold. But it really needs to hold that Fibonacci level of 618. It could go to the 786, of course, but the key level in gold is still at 1170. We take that out. That's not good. That's not good for anything, because that means you're going to be looking at some pretty much deflationary things, of what's going on here in the market. So that's the main thing. Also, we've had a really good move in platinum to the upside, which is sort of surprising. I guess it shouldn't surprise us, considering that, we had a 20-cent move in copper over a 3-day move. So it's going to be interesting to see how some of these things do. We're moving to the upside today with a slight bias, of course, and we'll see, what we've got. We did go down and match the lows that we made yesterday at that 1198 level. I really don't think that means a whole lot, folks, but that's just my opinion of looking at some of these things. So just keep an eye on it. That's what's going on at that time. We've had a nice little $10 rally in gold. Again, all that did was go up and make a 61% retracement of the high of yesterday from 1193. So here again, we're bouncing off these fib numbers again, and until we get above that level, we'll have to wait and see. The key level to watch, folks, in the euro is if we get above the it's 50 pips away from where I'm looking, but if we should get above that 106.50 level in the euro, that would be a really strong indication that these commodity prices have a pretty good chance of bottoming, i.e. gold and silver, and also crude oil. So those are the ones, and they're related to the dollar. There's no question about it. So, well, there is questions about it, but that's just my opinion. And since this is called the Larry Pesavento show, or the Billy Ray Valentine show, we'll just have to go with that. But that's what it looks like from the charts. And all I'm saying, if it does that, it's just breaking out above the 78% range that we've had over the last couple of days. We did get up to almost that 106.90 level. We got to 106.75 the other day. Then we backed off one more time. And that's really, if it's bullish, that's what it has to do. It has to do some backing and filling. Very seldom do you hit a spike bottom and things just, explode to the upside. We can see that in Treasury bonds. We're seeing it in gold. And there's a potential here of the same thing happening in crude oil. But that's still, whether it's going to be happening or not, we'll have to wait and see. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and someone's asked a question about my days at Drexel, about some of the unusual things that happened to me there, or funny things, or unusual. But there was one instance that still I remember to this day. It was 1981, and Drexel, we had a lot of private clients. It was a boutique firm, so it was really a fun place to work. But one of the people that Drexel used was, his name was Dandy Dan, the PI man. He was a private investigator, and anytime Drexel had a problem with an account, they would always ask Dan to look into it to find out what was going on. And he had his sources, so he knew what was happening in the world. But Dan was going through a divorce, and they were splitting the estate, and he had the choice of taking the house in the Hollywood Hills, which is a really nice place to live. But in 1981, you couldn't give a house away in the Hollywood Hills. We were going through the terrible recession, and it was low. And he had been married like 5 times. But anyway, he decided to keep the commodity account, and he was very heavily long T-bills, and he was out. He did his own trading. Of course, his account was with Jim Twentyman, and he was out about 90 grand out of a $300,000 account. So he was about $100,000 upside down. The house was worth about $250 at that time, I believe. So he gave her the house, and he kept the T-bills, and he took off to go to South America. He was gone for 6 months. When he came back, his commodity account was worth $450,000, and the house was still worth $250,000. So he bought another house out in the valley. But I always laughed about that. So I told Twentyman, I said, JT, I said, I don't know how you ever had the chutzpah to stay with that guy during a $100,000 drop thing. He says, hey, he said it was his money, and this is what he wanted to do. So I said, well, he did the right thing, and he paid the price to get the money out of it. But that was one of the funnier stories. There's a whole lot of them, but it was really interesting to remember some of these things. I can't tell you all of them because we're here to try to find a good thing to look at. Someone's asked a question about what are the things that look, interesting in the market. I think keep an eye on this wheat market because we are making new contract lows, and that is itself, pretty important. The fact that we're over this new moon is very, very important. And that's mainly because if you look at Dr. Andrew Lowe's book, The Evolution of Technical Analysis, he talks about the very first emissions were the astrologers going back to the Sumerians and Babylonians 8,000 years ago. And on the clay tablets, they had, the pictures of the full moons and new moons and Mercury and the prices of wheat. So there must be some correlation there to some of these things. So kind of keep an eye on that. So there's been a question about that number that I talked about in the euro. That number in the euro is at 106.50. The old high we had back there was at 106.60 and change, but that's what it looks like from my point of view, that's what should be happening in this. But we have some pretty strong resistance in this 106 level that we're trading at right now. We've been in a 40 or 50 pip range up and down overnight. So it's going to be interesting to see if it holds this level. The fib number on the way back, of course, the 618 was at 105.80, and we didn't hit the 786. That missed it by about 15 pips. So we still have a positive bias in that. The same thing in the gold. If we can get gold above the 1189 level, folks, that will really be a bullish sign for gold, because that means it tested the 61% retracement, which was also verified by the silver making the 1640 per ounce, which was the exact 61% retracement on the silver at that point. So those are things that I think that should keep our mind at what we're looking at. The overall market, stock market, folks, we've talked about that on Monday in the newsletter. I said it had a one-day orb, and if it didn't start down on Monday, we were probably wrong, and it did start down on Monday. Whether it's going to continue down or not is anybody's guess. We took out yesterday's lows now by just a little bit, but frankly, that doesn't mean anything. The key number to watch in the S&P E-mini, at least for December futures right now, we won't be switching over to those for another 10 days, but is 2184. If we get below 2184, then we're looking at something really amazing here to the downside. But right now, we're 15 handles away. It doesn't look like that could possibly happen. But as we saw in that copper chart, the thing went straight up and straight down. So those are things that you've got to be aware of, that any market that can give you 1,000 points can take 1,000 points away from you. That's why you've got to try to be a little bit careful as you're doing some of these things. And you're watching. One other thing someone's asked me is on stops on the E-mini. Frankly, I don't know how you can use a stop less than 3 points on the E-mini. I use a stop of 5. But remember, folks, I don't watch the machine all day long. I watch it in the morning for the first hour, usually, between now and then a little bit after the show's over today. Then the orders are already in or have been set. And then all I do is put limit minders in to tell me whether the market is getting ready to make a new low here or a new high. And then that'll tell me that the market's moving in the right direction or not. So that's really what I do. Mark Douglas proved to me that looking at the monitor was absolutely one of the worst things you can possibly do, because the monitor is an exact mirror of everything that's going wrong in your life at any particular time. And if you stop and think about it, our bodies are meant to prevent pain. And if you're short and the market is going up, that's pain. So you don't pay attention to that. You pay attention when the market is long and it's going up, because that's a good feeling. And that's why watching the monitor is no good. And believe it or not, you might find this hard to believe, folks, but no one really cares what position you have on except you. That much is 100%. There's one of the few things in the markets that are 100%, and that's one of them. No one cares except you. So always keep that back in the back of your mind of what's going on here. It looks like we're just about ready to take out those old lows in crude oil. We've been down here for just about an hour at this 45.20 level. It looks like we're going to break down, and that would set up another leg down possibly to 43. Now, the thing you want to watch here is that if we take out that 45 level and don't go anywhere, that's what happened to the euro when we got down to that 105 and change level on Friday. We rallied 100 and some pips off of that. That's where a double bottom is being tested. So watch that, and that should give us an idea if that is going to be, really strong support down here or not. But we've been down here for well over an hour now, just nothing happening. Now there'll be stops below 45. At least that's what they usually do. The neophyte trader will put his stops exactly at an even number, 45. They don't think of putting it at 44 80 or 44.90, they put it at an even number. And that's also something that you don't want to do. You try to keep it in an area where you don't have an even number. That's basically what we're watching as we're looking at some of the things. But some of these commodities like soybeans and wheat and corn are under a little bit of pressure this morning, and we have a little pressure in the E-mini S&P, but not much to speak of as of yet. But this can accelerate. Remember, the market accelerated on the upside. It can certainly accelerate on the downside, and we're getting ready to possibly pop through here on gold and get another up leg. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to take a look here at this long-term weekly chart on gold, showing you the importance of that 1170 area. We rallied $25 off the bottom. We came back and stopped at a 61% retracement here this morning. That's at that 1179 level. As long as that holds, it has a possibility of being very, very bullish. We've talked about this yesterday, the fact that platinum hit the exact 78% retracement on the weekly, and that silver hit the exact 707 on the weekly. Both of these markets have held 61% retracements on the test this morning. So that's why it looks so very, very important. Now, I also want to switch over here to talk about crude oil again. We've had a couple of people ask about it. As you can see, from the high of November 22nd, we made a perfect 61% retracement at 47.68. We've now come down and we're testing the bottom from November the 27th, 2 days ago. If we break through that with a little gusto, anything below 45 would tell us that we're probably going down and make that 1.618 expansion, which would complete the ABCD pattern down at the $43 a barrel level. That's $2 a barrel from where we are right now. So keep an eye on that, because remember, if it just takes that out by just a little bit, that means there were virtually no stops there. And that means that demand should start coming in, because 45 is a pretty critical level here on the crude oil. We need to watch that very, very closely. On the long-term dailies, that 45 level around 44.50 is the 61% retracement on the daily chart, and that's another one that's watching. So just keep a interesting eye on it, because it has a pretty good chance of meaning some serious things. We've got this new moon today. It's a very powerful signal in itself, that 14-day cycle. So that'll give us some rocking and rolling, if nothing else, during this time. But the key ones to watch today, of course, are bonds, gold, and the of course, the S&P, and then also crude oil. You have fourth and the euro. There's 5 things to watch today, so it's you're going to be busy. 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.